Good morning, traders and traderettes from Chicago. It's 8:01 a.m. My time here in this beautiful city. Today it is Wednesday, the 20th of September, 2023. This is episode number 2540, and yes, it is FOMC day. FOMC ahead of us today. We'll talk about that a little bit. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, what do we have today here on our convergent trading pre-market summary sheet? We have mild risk on. We're pushing higher. You can see the indices are green. The treasuries are also green, and so are metals. Crude coming off, crude falling below that 90 level we've been referencing. It looks like we'll go over the technicals of the auction and what has happened in terms of price action, but just know that we are in a mild risk on environment. The S&P is holding above 4,500 currently. Big battle zone. We'll look at that. Pre-market, we had General Mills for earnings. General Mills came in with a beat of about 1%, nothing too exciting, on $4.9 billion in revenue. The big one is FedEx. FedEx represents logistics and transportation, and that's coming in after the close. Their estimated revenue is at $21.81 billion for Q1. This is Q1 for FedEx. And the expectation is $3.74. That's going to be an interesting one to watch, because FedEx does, the transportation sector, logistics do represent the kind of lifeblood of the economy here in the U.S. We also have KB Home, $1.4 billion in revenue for Q3, expecting $1.43. So what's the news? We had some inflation numbers out of Great Britain. We did get the PPI out of Germany. The Great Britain number, the inflation rate year on year, came in at 6.7% versus 7%. So it was better than expected, lower than expected. The core inflation came in at 6.2%, way better than expected on the from Great Britain there. PPI core output also beat. And the year-on-year also beat 1.6% versus 2.1%. So good news out of Great Britain there. And what that's doing is it's causing the BOE move, the next BOE move, which is tomorrow at 7 a.m. Eastern. The Bank of England is now priced in at a 50-50 probability of a pause, making it a coin toss. For us, of course, we have the FOMC today, the rate decision, and here's your FedWatch tool, which basically is built on the action by 30-day Fed fund futures. The FedWatch tool is pricing in 99% probability of a pause. You can see the current rates 525 to 550, and there's a 99% probability bet that it remains. So we're looking at a pause here for the Fed, and it's been that high for quite some time. You can see a month ago it was at 89.9%, 96%, and so on, and it's been kind of climbing, 96, 98% yesterday, and 99% today. So that's what we're looking for today. Any surprises to that? Any deviation from that expectation is expected to bring a lot of volatility in. If we don't deviate from that, then we're likely to just the auction goes back to being technical, and we move along at the normal for the normal destination. A couple of interesting things. There's the U.S. government shutdown. There looks like the House Majority Leader who is a Republican, is kind of trying to it looks like trying to make some political moves as always with these guys on both sides, and they're looking to kind of pressure the Biden administration with a government shutdown. So that's starting to become more and more apparent. Philip Morris is looking to sell its pharma business. Philip Morris, of course, is a big presence in the Dow and other indices. An interesting note, 24% of the office space is vacant in 18 major Chinese cities as of June. That came out of CBRE. This is quite significant. There's a lot. That's a lot of vacancy, and the U.S. is looking at 18.2% for that same period, June. This is the worst commercial vacancy rate for the last 30 years, and that's where a lot of people are saying the issue lies, especially with how this is all papered. So very interesting to watch. You might want to go and watch The Big Short again, that movie, fantastic movie, to bring you back to what this all might mean. Not saying that it'll be a Lehman Brothers, Bear Stearns type of toxic environment, but these are pretty bad numbers for the banks. Today, what's left, we have crude oil inventories at 10:30. And then the big ones, everybody's got access to a calendar, so I don't need to go through each one. And then we have the 2 p.m. Fed rate decision, and then we have the press conference. The press conference is what's important because we're already pricing in what the rate decision is likely to be. So that's where we stand. Looking at the S&P multi-distribution profile in the overnight session, and what that's telling us is that it's an active price discovery auction. The volume, though, is pretty poor at 132,000 contracts. Really, we expect it to be above or at 170,000 or so. The more, the merrier. Range is 23 points. Pretty decent. Again, the volume's pretty light, so participation in the overnight session has been light. I'm not aware of any holidays in any major markets, so that's going to carry forward. Here's what we've got in terms of where we're at. Yesterday, the expectation, if you recall, is that we would take out the 83.25. For those of you who are here, 83.25 was a key test area. We're looking for initiative selling yesterday, and that's what we got. Remember, I came in and I said any bounce up, I'm going to look at every bounce up as suspect, and the expectation is an impulse down. There's your impulse down, and we're looking for that 83.25 to be taken out. And the key price that I put on the chart was 44.60, right? So if you go to yesterday's video, and I don't want to spend time pulling that up just to show what we talked about before the market opened yesterday. I mean, for those of you who've been here, we kind of go through this all the time, so there's no magic here. You can see that it's just a simple, simplifying the process, but also sticking to a process and being consistent with a process is what's producing these results, and the ability to see with a pretty decent probability, but remaining open with an open mind, remaining without a fixed mindset in that the market could prove us wrong. But the idea yesterday is to go to that we're likely to test 44.60. And we pulled right into what was the low yesterday, 44.62.25, 44.62.25 before we went and we poked through the IB high. So we took out the IB low, really nice pullback on the IB here to sell into the 60, pretty decent action there. But we ended up taking out the IB high by 2 ticks, not a range extension, but 2 ticks nonetheless, giving us a neutral day and finishing in the upper distribution the upper distribution of the day. So we had this very clear low volume node there. We closed in the upper distribution. There was a setup right here against VWAP. I talked about this in the Convergent Trading Mavens channel, that given the impulse up, the only area I see anything happening is a break higher from VWAP on the pullback to 83, and that held pretty good, and we finished in the upper distribution. What this is doing is it's attempting to reverse. It would be nicer if it was a neutral extreme up day, meaning it pushed through the IB and held above the IB. It would have much easier continuation. But we're coming into, we're up against this 4,500, and the 4,500's been difficult. So when we look at a chart of volumes, we'll look at that, our TPO chart in a minute, you'll see that there was quite a bit that traded here at 4,500, and you can see in the overnight session, there was quite a bit that traded in the 4,500. So in the overnight session has almost three distributions, three distributions, and we're pushing highs. We're continuing to push highs with a good separation from VWAP in mid. This is telling us that the market is out of balance, right? The market is moving away from yesterday's auction, and it's created some pretty good separation between the day generated levels. So we have the overnight point of control down here. We have full session VWAP, full session mid right there, and it is moving away. It's creating imbalance. So we are likely to see some sort of a response on the open. It's not likely to be a sleepy open is what this is saying. So I want to pay attention on the open. Yesterday, despite the move higher and holding higher, we did finish right at the open, and we did finish with Delta being flat. So Delta and price were moving together yesterday, which is nice to see. The Delta is positive. The very large and small lots are not participating much this morning, and that's an important thing to observe. Here's the TPO chart. We're looking at, if you look at this chart, you'll see how we're fighting in that 4,500 area. We've fought it for a couple of days, and now what we've done is we've broken the one time framing down, and this is significant. So today we're opening in a gap right in the middle of the range. Remember, 45.15 is the MCPOC and MCVPOC. It's the point of control for TPOs as well as for volume. Excuse me, as well as for volume. So this 15 is an important area. This is where we stopped last time, right? We stopped at 1450 last time. Very methodical. One thing I did comment on in the Mavens channel is that the auction is proceeding in an orderly way, which makes it a little more predictable. And with the break of one time framing down, what we have to look for is immediately any pullback to the downside. Let me clear my throat. Any pullback to the downside is expected to be bought. So we're looking for this morning as a key element, any move towards the 4,500. We're looking for signs, indications of support. We're looking for structures to trade against where we can define risk. Between 4,500 and 96 is kind of the sweet spot, and then we're looking to get long into the 15, into the 20, right here. 20 is the next area up into the 20, and then we're looking for it to snooze into the FOMC, right? At some point, it's likely to just kind of go quiet. So I'm looking for a pullback to the 00, to the century figure, to the 96. If it does drop through, just close the gap here, the gap zone, and then to bounce back up and essentially just kind of go sideways into the FOMC. And once the FOMC kicks in, we're now starting to look for which way are the impulses and which impulse gets the continuation. Whatever impulse gets the continuation, that's going to be the side we trade from after the FOMC rate decision, and we need to kind of pay attention to what the conference is doing. So that's what we're looking at today. If we do push higher and it's weak and we get an impulse down again, I'm looking for 96, and then it brings 44.90 back on deck. And if the 44.90 doesn't hold, then you have the POC, the TPO POC, but I'm not expecting it much below 44.83.80. 83 and 80 here are expected to be the backstop to any selling before it kind of bounces back up. So the range limits for the FOMC, and it all depends on how much work we get done before we get to the FOMC. The range limits are expected to be 20 on the top side and 80, 83 to the downside. So you have a 40-point range there, which is quite normal for an FOMC day. You have that and we are, it's the symmetry's there with the 500, 4,500 right in the middle of that, 45.20 to 44.80, 83, 500 being the mid. And we're trading at 45.06, so it's very symmetrical in the way it's setting up. I think that's very likely to make it easier to read today. So that's what we have for the S&P. Again, right now we are pushing highs. See that? We're pushing highs. We've got collisions as we push into the highs. Let's look at the heat map here. Look at those collisions. So those collisions would not exist if the size was not there. So there's somebody who's unloading or is offered and is willing to take the market orders into their offer into that 45.08. Remember, the 45.0750 was the high just a couple days ago, or a couple days ago. And that's where we went to a couple days ago, is 45.0750. Then we went to the 14 and stopped just short of the 15 up here. So the heat map is showing that there's a battle in here, and the expectation is it's very likely to pull back a little bit on the open. We'll watch for that. Looking at crude. Crude is interesting. The NASDAQ, same story, really. There's not much to say about the NASDAQ. The NASDAQ, one-time framing down. The NASDAQ's relatively weaker. It broke below the low of balance a couple days ago, and then it continued yesterday. But the NASDAQ also shows, an open, test down, and finish above the open. Relatively bullish close yesterday, same as the S&P, and the NASDAQ is now in this kind of balance-ish area between 450 and 400, and it's just sitting here sideways. The expectation is it's very likely to pull back and also start working its way back up to the top side. The NASDAQ is looking to test this area up here, the 15,530 or so. I think I talked about it a couple of days ago. 530 remains a target up above. If the NASDAQ falls into the prior day's range, cannot hold settle, cannot hold the point of control, the NASDAQ's very likely to push right down lower than the S&P because it is relatively weaker. And then crude did this thing where it opened in a gap yesterday. It really tried to squeeze and stay above the 92 area and came right back in. And crude has been doing that, opening up, closing down, right? So crude is showing signs that it's just really getting exhausted. And the sweet spot for crude right now is 90. And then if it doesn't hold this 90 area, the sweet spot's right down here in the 88.60 area. That's the next key area to test. You can see there's a low volume node here, a notch out, poor structure down below. So if this morning crude doesn't come back, close the gaps, get into the range, and hold that range into the 91 area, crude is very likely to fail and turn over technically unless news comes out. So I'm looking for today is an important day for crude because if it doesn't get back into yesterday's range, it is already showing its weakness, and it's very likely to turn over, get to the 88.60, 88.50, and then start working its way back through the balance areas down below. So you have this 2-day balance right here at 88, and then beyond there, 87 and a quarter, and then 86.75 is where the last big acceptance price is. So I'm looking for this thing to kind of work itself back, and then ultimately end at 86.75 before we start to see that those who didn't catch the run up are stepping in, and those who are stuck with a late long are likely to defend on the way up or exit on the way up. So crude's starting to make a turn. So by the end of the day, or at least 1:30 today, Chicago time, the question will be, did crude get above 90.31 and hold up there, or did it not? And that's going to very likely dictate what happens the next few sessions. So FOMC, just to wrap up, FOMC, what's the expectation? The FOMC, we're expecting a move in the morning, expecting it to go sideways for a period of time. A few minutes before the FOMC, desks around the world are going to look at their position, then they're going to go into the futures, hedge whatever exposure they have at that point because the market's moving. They're going to hedge their position, so you'll see a flutter before there, most likely. And then we get the volatility, and then it pauses. It goes sideways for a little bit until the conference, and then once the conference kicks in, that's when we expect the real move to happen. So the FOMC tends to move in 3 parts, 3 moves. So we want to see the big move. If it's down, we want to see if the pullback exceeds the big move down. If it does not, then you're looking for the third leg to be in the direction of the initial move. So you have the initial move almost like an initial bounce. We want to see if the second move takes out the top or bottom of that, and then the third move generally moves in the direction of whichever side broke. That's not always the case, but that's very commonly what the FOMC does, and that's how I generally look to trade it. So we'll see what happens there. It is not recommended that you trade a big news event like this, but it's pretty good to watch how the auction unfolds at that point. Good luck. Don't forget to hit the like button and mind your risk. Make sure you're able to come in and trade tomorrow, and I'll catch you tomorrow morning. Take care.